Most Asian markets, actually all of them now, which are in the red.
Encourage the fintechs to establish a self-regulatory organization.
Next major hurdle stands at 19,700.
They are not in talks with Haldiram's.
L&T has been selected as, the preferred contractor for a contract worth $2.9 billion US.
Mid-caps in the Bank Nifty are actually have started a tad bit in the green.
Mid-cap space, in fact, has really moved very fast in the last 2 months especially.
Competition will always be there. It will always, new competition will keep coming. It's a question of how we react to it.
China is going through this 3D problem of debt, demographics and disinflation.
Advanced bookings are something to go by. It'll open with a 100 crore collection.
And the poll says 50% are expecting the ICRR to be tweaked.
Flat in the benchmark indices and the rally continues in the broader market.
Probably the India presidency is looking forward to the G20 membership agreeing upon a common, common template for regulating crypto assets.
So power across the board, across capitalized market capitalization is doing well.
Okay, well, that is the day so far. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Reema and Surabhi. And once again, it's a strong, strong day. Although Reema, I think, is more interested in what's going on outside of the office gates with all the holes and
I just feel there's a festive spirit, which is outside and is getting reflected in the market. I can hear like Govinda Ala Re Ala, and I was like, what's coming right now is just gains in the market, right? It just continues.
Well, it continues. I mean, we could do some music to go with the market.
Festive fervor in the market for sure, looking at the way the Nifty is now taking aim at 19,700.
It's the 7th consecutive day that the mid-cap index has hit a record high.
Yeah. And it talks to the strength that oil is 91 and whatever else, but the market here continues to rally on, right? And I think that's quite something. So 70 points once again, and this is looking very, very strong. So just a couple of points, right? Strong markets all over, advanced decline, broader markets. I'll come to that in a bit. Nifty is nearing 19,700. Why is that important? That's a 61.8% retracement to the July 20th high to the August 31st low. So that's the full 61.8 golden, so to speak, golden retracement. Above that, you basically target another 200 points. You look ahead another 200 points, and you that's an all-time high of 19,991, 19,992. Bank Nifty is nearing the level we put out in the morning was 44,660. It's basically we're there. 664 is where we're at right now. That's the first number. And the same 61.8% retracement for the Bank Nifty is 45,312. Again, not very far, a couple of percentage points away from here. Mid caps and small cap indices are gaining. They're up 0.6, 0.7%. Just one day halt for that part of the market yesterday. The indices ended flat, but they're back to winning ways once again. Reema.
And markets are climbing higher and higher. The Nifty is now perhaps eyeing the 19,700 mark. It's a solid session. We got a morning dip. The Nifty opened in the red, but since then, buying has emerged. And for the last few days, the markets are giving you those dips, and all those dips are being bought into, whether it's in the mid-cap end or even on the large-cap space. The good part is that today, banks are performing. So the Nifty banking index is actually outperforming with a gain of close to about 0.5%. And today is the weekly expiry. So keep your eye on the last 1 hour. There are two powerful themes at play. One is power, and the other one is shipbuilders, and we'll talk about both of them. But in the power stocks, you've got Coal India, which is firing, NTPC, Power Grid, PFC, REC, across the board. You are seeing these stocks getting bid up. And the second one is the shipbuilding names, right? It's the entire defense play, but today, particularly the shipbuilding ones. Cochin Shipyard locked in an upper circuit of 20%, 10% on Mazga, and Garden Reach Shipbuilders up 14%.
It's absolutely remarkable the manner in which the Indian market has completely shrugged off all the negative global cues that we had. And I mean, just for the record, I want to place the negative cues on board because we had most of the Asian markets down and out. The Hong Kong markets were lower. Look at the way the dollar is trending even now. I mean, it's that close to 105. There's been no big fall in the dollar index that's kind of led to this euphoria in India. It's an entire domestic rally. You don't have any support from global cues coming in. Even right now, the European markets that are trading, ambling along, mildly negative to maybe just a little tick of green on the CAC. But otherwise, it's been a little difficult for the global setup. But that hasn't deterred the India bulls. Apart from the shipbuilders, just some more names, to give a sense and some flavor of what's been happening in the mid-cap market. Look at names like IRB Ashoka Buildcon. A lot of these construction companies are alive and kicking in the market today. Then you have stocks like Devyani International. Power, of course, is a theme Rima mentioned. I mean, GMR Power, PFC, a lot of new names beyond the regular Power Grid and NTPC. A lot of the tier 2, tier 3 names, they are also up and about. So strong moves coming in the market. And today, finally, banks have participated. Usually, they are the ones that keep a complete lid on the gains. But today is one rare day that banks have led from the front. And that seems to be really helping the bull's case.
Indeed. Yesterday, it was HDFC Bank. Today, it's ICICI Bank, Kotak, Axis Bank. These stocks are getting bid up. Just the point about, how global cues are negative. Maybe it's negative for the FIs. Maybe the FIs are going to sell in the Indian markets. But the way the demat accounts have opened, 10 crore demat accounts in India now, it's gone up, I think, 2.5x in the last 4 years. It was at 4 crore accounts in 2020, there about 1920, and now it's come up to 10 crore. And there's so much domestic buying that it's offsetting what's happening even on the FI front, and markets continue to march ahead. But let's get back to some trading calls. How should you position yourself in the last hour of trade? Mitesh Thakkar is with us now for a few closing strategies. Mitesh, afternoon. 19,700 is almost here. We blinked and the markets have moved up 15 points. From here on, what's the trade?
Good afternoon. So I think two things, one, I had maintained a target of 19,680, 700 on the Nifty. That looks like a little bit crossed. The reason I'm saying so is because the bank Nifty on an intraday chart has managed to get past the channel, which was at about 44, 690, 695 zones. We're just trying to get past that. The bank's individual stocks also showing good momentum, especially led by HDFC Bank, sorry. So I think, with this kind of a setup, it is very likely that the bank Nifty will edge higher. The target I'm looking at is around 45,050 to begin with. But a good chance of us heading towards 45,350, 400 zone, which is what Prashant was also highlighting. So if you have about 600-700 point kind of an upside in the bank Nifty, and the Nifty charts also are not showing any signs of weakness, it is likely that the Nifty will also head towards 19,850. So one, if somebody wants to take a trade right now, I think the bank Nifty with a 120 point kind of a stop loss on the spot is what I would recommend, going long over here. And try to ride it, take some profits around 45,050 and then 45,350. And on the stock side as well, I have two buy calls. Sale is something which has given 3 days of pullback, tested the gap and bounced back from there. So keep a stop just below today's low. 97.25 is what I recommend, and look for a target of 104 here. And the other stock which I like is Tata Motors, which after a few days of consolidation is showing some signs of an upside move. So that's a buy with a stop at 608 for targets of 635.
Okay, Mitesh, thanks for that. We'll come back to you shortly for more. Now, United Breweries is this first stock we're going to talk about. It's surging. Last I checked was about 5% plus higher. And they've got a new man at the top. They've been without a CEO for some time, but one has been appointed now, and the market seems to be liking it. Mangalam is here with the details. Mangalam.
Well, nothing excites a consumer stock more than the announcement of a new leader is something that we've learned over the last couple of years. And importantly, if it's a company which has strong brands and has been underperforming and has been leaderless, then the appointment acts as a bit of a positive catalyst as well. And that's exactly what has happened with United Breweries as well, where they've announced Vivek Gupta as the MD and CEO for the next 5 years. Remember, the earlier MD and CEO, Rishi Pardal, had resigned in February 2023 itself. And since then, the stock has been underperforming. I mean, just to put things into perspective, despite today's move of 5%, the stock is actually down 2% from the start of this year, which is a vast underperformance. If you take a look at the other, alcohol stock in the same space, we have United Spirits, which is up 20% this year, and the mid-cap index itself is up 30%. So it has been an underperforming stock, leaderless, and now a new leadership has come about. Where does Vivek join United Breweries from? Well, he's joining the company from Udaan, where he was the chief business officer earlier. And prior to that, he's been working at P&G itself for more than 20 years, 22 years to be precise. And he's also taken up leadership positions at international arms of Procter & Gamble as well, where he was the MD of P&G Australia and New Zealand. He's 47, so obviously has a long growth runway ahead of him and an MBA from IIM Ahmedabad. So person joins in from Udaan and the stock literally takes off. That's about United Breweries.
Well put, Mangalam. Indeed, I mean, that's an appointment that's definitely got, the stock on a high, if I may add. Interesting one. Thanks very much for all the details there. Deven Choksi is joining in, so let's kickstart the conversation with what else but this big move that United Breweries is right now making. Deven, good afternoon. Good to have you on the show. What is your, overall take on this alco-bev space? Because if you look at discretionary consumption and if you look at stocks like Titan, I mean, there is so much buzz out there. Even Sula, if you're talking about the alco-bev space. What thoughts specifically on United Breweries and this appointment?
Well, Survi, I think would refrain from putting my comments on this sector because I think we don't like this sector.
Okay. Overall, your sense on, let's say, urban discretionary consumption is that a theme that you like? And if yes, how would you play it?
Well, I think that remains certainly clearly a favorable play because given the kind of disposable income in the hands of individual consumers, I think the amount of money which is being spent in each and every area, be it in the area of leisure travel, be it in the area of hospitality, be it in the area of the purchase of vehicles, and also I think in the area of white goods. So all in all put together, I think the trend remains extremely favorable. Fortunately, I think along with higher amount of disposable surplus in the hands of people, comparatively, I think for the companies, and particularly I think for the auto hands and the FMEG companies, their input cost currently remains, I think, quite under control. And that is, I think, a good news as far as the margins for these companies are concerned. So on one side, the demand scenario remains upbeat. On the other side, the margins are remaining intact, which is, I think, a good mix of performance for profit performance for the companies. So from that perspective, yes, I think most of the companies are having a good run at this point of time. I don't know, I think how much one would probably, I think, attribute it to in form of percentage appreciation, but safely put, I think around 15 to 17% kind of appreciation is being seen in some of the FMEG companies that we are talking about.
Okay, let's move on and talk about the shipbuilding stocks. Mazgaon Docks, Cochin Shipyard and Garden Reach. They're all sitting at a record high. Now, shipbuilding stocks have doubled their market capitalization in 2023. What has it done to the government stake in these companies? Hormas joins in with the details. Hormas.
Well, it's been a stellar rally, right, in all of these three names, and they've moved in tandem with the entire defense theme that has gone up this year and some part of last as well. And I'll talk about all three of them individually, starting off with Mazgaon Dock. That stock is up 160% this year, and the stock now from its IPO price of 144 is up 14 times. So that shows the kind of rally that the stock has seen. Now, it started this year with a market cap of around 15,500 crores, almost 16,000. As we speak, that market cap is touching 42,000 crore rupees. Now, the government owns around 85% stake in Mazgaon Dock. Now, that is valued at close to 35,000 crore rupees at the current price. Now, here's a bit of a concern as well. Now, over the last 5 years, Mazgaon Dock has seen a consistent decline in its order book. It started off FY19 with around 55,000 crores. As of FY23, that number stood at 38,000 crore rupees. And the management, the company received an order recently worth 2,700 crores. And as of their June quarter update, they mentioned that their order book stands at around 39,117 crore rupees. The management mentioned that this entire order book will get executed in the next 3 to 4 years, and they're expecting to grow on an average of around 20 to 30%. The street, though, is turning cautious, with analysts projecting a potential downside of close to 24%. Now move on to Cochin Shipyard, and that stock has also doubled this year, and it's been the best year for the stock since it listed almost 6 to 7 years ago. It started off the year with a market cap of around 7,500. That has doubled to now 15,000 crores, and the government, which owns a 72% stake in the company, is now valued at 11,000 crore rupees. Now I'll talk about the sales bit for Cochin Shipyard, and they have been very erratic. Peak sales in FY20 stood at around 3,500 crores. They have still not managed to cross that figure. Now, the management said that there were plenty of operational issues in FY23, which led to them not being able to generate the kind of revenue that they did, which is why is the underperformance. And the company recently won an order worth 580 crores for cargo vessels and another 300 crores from the Indian Navy in June. Analysts are expecting a potential downside of 37%, which is the highest among the three companies. And lastly, for Garden Reach, that stock is also up 90% this year. The market cap of the company has also doubled from around 5,500 to 11,000 crores. and the government, which owns a 74.5% stake in the company, is now currently, that stake is valued at close to 7,900 crores. Now, Garden Reach's order book has also been pretty stable. It has not gone up substantially, but it hasn't gone down either. And at the end of FY23, it's at 25,100 crores. They also won an order worth 248 crores in May. And the management spoke to us last month, and they mentioned that this entire order book will get executed by FY27, and the next 2 to 3 years will be peak revenue years for the company. And the street here is also cautious with potential downsides of close to 22%. So there's been a stellar rally in the stocks, but the street is erring on the side of caution.
Okay, thank you very much for that comprehensive analysis. Deven, as Hormas was telling us, for some companies like Mazgao, the order book has been steadily declining. Some companies are still not back to what their peak revenues were about 2 years ago. Despite that, these stocks have rallied and rallied hard. Where do we go from here on? Do you think there is some exuberance built into the stock price and current valuations?
Well, I think promises are many, and I think these companies have the potential to deliver those promises. However, when you look into the past of many of these companies, at the best, I think they have grown their top line by 15-20%, and at the best, I think they've grown the cumulative profits at around 20-25%. So I think the quarter after quarter, I think the numbers are not something which one can see very consistency in this business. Hopefully, that should change in the coming quarters and the years, because the government's orders which have been released and are likely to be released, I think are likely to suggest that these companies would have relatively stable business environment compared to what they were before. Only caution that I'm always putting across that government is the largest customer in this particular space. The margins are always going to be, I think, quite competitive. And that's where probably I think the higher valuation may result into, I think, some kind of disappointment for investors if they probably buy at a price where I think the stock would languish for a longer period of time if the price performance do not match with the profit performance. So that is a caution that one needs to exercise, but otherwise the environment is becoming quite clear. Hopefully if they deliver on a sustainable basis in next 12 to 18 quarters, I think they would be probably relatively safer companies to stay invested, but buy at a deep, that is what I would like to consider.
Devin, any thoughts on, I got that. Any thoughts on Coal India? It's up 6% today, 15% this week.
So the good news, Prashant, out here is on steadily they are increasing their output, which is around between 15 to 17%. And the price realization, both in e-auction as well as in the contracts, are definitely working in favor of Coal India. So from a perspective of looking at relatively higher and sustainable performance, yes, I think this is a time where you are seeing this particular performance now happening. In last few quarters, I think we have seen the sustainability in the performance, in the production, in the revenue numbers, and that could possibly continue going forward. Maybe I think currently many of the public sector companies, including in this particular space, mining space for coal, are relatively under-owned, and as a result of which I think they are also available at a valuation which is not far too expensive. That is one of the reasons for which allocation of capital is going into these companies and the investment is taking place. Downside remains limited as I see it, but I think don't expect too much of a upside immediately. Maybe I think average appreciation of around 15 to 20% should possibly be considered as a good appreciation in the stock price.
What a chart that really is, Coal India, right? Looks like almost like a mid-cap stock, as if something just suddenly shot up. But that is what the last couple of days have really done to the stock when we, became aware of this acute sort of power shortage that was building up in August with demand rising big time. And that is Coal India for you. By the way, what's also rising is the market itself. I mean, look at the momentum. When we started the show, we were saying the Nifty is taking aim at 19,700. It's done that and more. It's now moved to 19,225 to 26. Sharp moves on banking stocks. Pull up Axis Bank, ICICI Bank, HDFC Bank. All of these financials are really powering the Nifty. Those are the big ones. Yeah, that's Bank Nifty itself now full 1% higher. All of its constituents are moving up. Reliance is helping the market as well, with a gain of about 0.25%. So Reliance also is now slowly beginning to join this party, and it's turning out to be a pretty heady one on the street. Suddenly, look at that move on a big stock like Reliance Industries. Well, let's take a break. We'll keep tracking this big surge that we're witnessing in the market and get you more as well in just a bit. We'll be right back. Welcome back. Well, let's focus on one more stock, L&T, which has been in the spotlight today, and it's been moving higher after CNBC-TV18 learned from sources and reported that the infra major could be bagging in a mega order, an order that could be worth nearly $3 billion from Saudi Arabia's Aramco. Vivek has the details. The gains are now 4%. What a move today, Vivek. Tell us more about this order that could potentially, really be huge for L&T.
Well, absolutely right. Every time we talk about L&T, the size of the order win is something that does matter for a company of the size of L&T, and having an order book in excess of 4 lakh crore. An order win in the range of 5 to 10,000 crore is, routine business. But this particular order win is quite significant and quite material. What we understand is that the company is the preferred contractor for getting Saudi Aramco's Jafurah unconventional gas development project. Like you mentioned, this particular project would be worth, or this particular contract would be worth close to $3 billion. That is almost 25,000 crore, between 24 to 25,000 crore. Now, what will actually L&T do for this particular contract? L&T will develop the gas processing plant and the main process units for the project. Now, very interestingly, Saudi Aramco also recently invited bids for close to $10 billion for Safaniya gas field, and these bids were recently submitted. While it still remains to be seen, what exactly and where exactly is L&T the lowest bidder and the preferred bidder. This is also another order that is important to keep track for. Now, apart from that, we did reach out to L&T. They have not yet responded to our queries. To give some context, at the end of FY23, L&T had an order book in excess of 4 lakh crore, and they gave an order inflow guidance, on a base of 1.8 lakh crore of 10 to 12% upside. So with this particular order win and some few other order wins that are in the pipeline, there is a good chance that L&T at this point of time would be able to go ahead and exceed the order inflow guidance that they're given. Also remember, Q3 and Q4 could be slightly lower. Management has flagged off that given it's a pre-election year, the domestic ordering activity could be slightly subdued then.
Okay, all right, got that. Thanks very much, Vivek, for the details. Huge move really on that stock today. Devin, what do you think? This is, of course, a big trigger that the market has latched on to. L&T's had a great run as well, no doubting that. How do you find valuations now versus, let's say, historic highs? And would it still make it to your portfolio?
So, I think we have been holding the stock in the portfolio. But more importantly, the visibility of the order book, I think, is now basically standing at around 2.5, 3 years. I think from the perspective of execution, I think the company is pretty steady in the execution format. Given the large size order book, given the large size executions, and in infrastructure space, one is not too gung-ho about, I think, seeing the very high jump in the execution business. Execution would remain probably in the vicinity of around 15-20% kind of a growth going forward. And same would probably be the situation with a higher amount of new order intakes. I think the infrastructure related space is commanding significantly a high amount of attention at this point of time. And as I've been making a point earlier too, that I think this kind of companies probably deserves to be there in the portfolio, because I think they are steady performers, and probably I think downside risk in the current environment that the government is spending maximum amount of money is relatively less. So any fall in the stock price, I think in a given situation in the market, would be a more than welcome kind of an event for adding the stock further into the portfolio.
Okay, got that. Devin, thank you very much for joining us. It's a pleasure. Appreciate you coming on the program as always. Now, the large cap IT space is in focus today following TCS's $1 billion order win from JLR. My colleague Rima is joining in to put the spotlight on some of the large deal wins the sector has seen so far. Rima, take it away.
Thanks so much for that. There is macro uncertainty, there is a global downturn, but yet the IT companies, the stock price has been resilient and large deal flows have been trickling in for the large cap IT names. This is what's different this time versus the previous downtrends for the IT companies. That IT companies are winning large deals despite this slowdown. Their order book is solid. Just today, TCS announced a large deal with JLR, which is valued at $1 billion, spread over 5 years. But in the last month, in the month of August, we had HCL Tech signing a $2.1 billion Verizon deal, and Infosys signed a mega deal with the Liberty Group. It's valued at €1.5 billion for a period of 5 years, but there was an option to extend it for a period of 8 years with an estimated value of €2.3 billion. So basically, these are mega deals. Not just that, Even the stable US economy has been a driver of the IT stocks outperforming despite very poor numbers in Q4 of FY23 and Q1 of FY24. In fact, most IT stocks in decline post their Q1 numbers, but since then, the stocks have recouped all their losses and now are trading well above the levels that they were prior to the weakness setting in. Year to date, IT stocks have done very well with names like HCL Tech, LTI, Mindtree, Tech Mahindra, all a part of the Nifty, having seen a growth of close to about 20-odd%. So that's about the stock price. And it's not that deal wins have picked up only in the last 1 month or so, in September and August. For the last 2 quarters, which is where the slowdown has been most pronounced, the company's order book, the deal wins, the pipeline has been very, very solid. Just for reference, we've taken for TCS and for Infosys. Now, both for TCS and Infosys, the deal wins in Q1 were higher compared to what they were in Q1 of last year. Now, the only risk to watch out in all this, in these large mega deals, is will these deals be margin dilutive? Because typically, when you have these large deals, and these are all cost takeout deals, where the company, the client, is trying to bring down their costs, optimize their costs, that they typically have low margins for the IT companies in the initial period due to transition. So currently, the street is penciling in a pickup in FY25 margins. But if these large deals are margin dilutive, then is there a risk to the FY25 margin assumptions? We told you about the stock price gains and how the IT stocks have outperformed. Let me also leave you with the valuation plate for the large cap IT companies. Back to you guys.
Right, Rima, thank you very much for that interesting kind of information on IT. And I'll Rima, let you pose a question on IT to Shiv Sehgal, who's our next guest. He's joining us now, President and Head of Nuvama. Shiv, good to have you with us here. Thank you very much for your time. We had a discussion on mid caps, small caps with 2 fund managers yesterday. And we looked at, I don't know if you saw that, but we had Pankaj Tibrewal and Tahir Badshah talking to us about that space. And we looked at, mid caps relative to large caps as a percentage of the total free float market cap and historical valuations and everything. You are looking at this in a different way. You're bringing in the global comparison here. And you seem to be saying that globally mid caps have not done very well. And it's an India phenomenon. And you're kind of drawing that comparison saying that it doesn't last. Explain, Shiv. I mean, one would imagine especially, smaller companies can be impacted by local trends more, right? Larger companies, I mean, the trends are similar. What's happening in the US will happen sometime here. And I guess vice versa. But does it necessarily have to be true for some of the smaller companies as well? Go on.
So firstly, thanks for having me back. I think the last time we spoke was a couple of months back and I was extremely bullish. And I had mentioned that I remain bullish. And the Nifty mid-cap is up like 22% since we last spoke. Firstly, I remain constructively bullish on the India space, right? I think India is going through a transformation that the likes of which we have not seen before. Putting some anecdotes to your question, I think there is no anomaly. You guys have discussed it as well. At the moment, the mid and small cap stocks now constitute 31% of India's total market cap, which historically we are at the premium levels. And, a lot of these mid caps have not seen these prices since, the peak in 2018 Jan. But having said that, I think, whenever you see a massive ramp up in a short space of time, which we have seen in the last 3-4 months in the mid cap space, there is a little bit of consolidation that is required. And to your point, absolutely, I have mentioned that, the Indian mid caps are a bit of an anomaly globally. Globally, we have seen that apart from in the last maybe 2 or 3 weeks, some EM flows have coming back into the China small cap space. But by and large, any flow that has happened in the EM space, in the small and mid cap space, India has been the forefront of it. And it's similar at the massive passive level as well. We talked about the stat that if you look at year-to-date EM flows, India has generated 50% of those inflows into the country. So while I think there is a time consolidation and the ramp-up has been quite aggressive, and there is a phase that, we do feel, and I do feel that smart money will move into large caps from here till the end of the year. Not saying that, necessarily mid-caps see a sell-off, but I think some consolidation is definitely on the charts.
That's interesting, Shiv. Hi, good afternoon. So to be here. So, okay, you've put out one sort of expectation on the table that maybe incremental money will chase more large caps, which have had a more subdued year so far. The other question that I have is that, if someone were to put in money in the market now, should that money go into themes which have already worked very well and beautifully well, whether it's capex, power, industrials, look at hospitality, what's happened to hotel stocks, some of these electronics manufacturing stocks, so, railways, defense. Do you stick to what's working, or is it getting too hot there, and therefore does one need to look at areas like maybe, IT, pharma, or banks for that matter, which haven't participated that much in this rally?
So Surabhi is spot on. I think it's always prudent to, especially in India, we have seen these cyclical rallies and the flow of momentum shift, from period to period. And what has worked so far is actually quite amazing. And I was looking at these stats before coming on. This year, out of the 23 subsectors that we follow, almost 22 are in the green India, right? And if I was looking at the historical comparison in 2022, 2021, there was a subsector of only about, 8 or 10 or max 13 or 14 out of the 23 that were contributing to the massive gains. This time around, it's very broad-based. As you rightly said, in certain sectors, we have seen very significant outperformance. I do feel that I also have a view on the global outlook from here till end of the year. There was a period, and I'll just give some anecdotes to this. Early August, we saw the narrative shift that, peaks have kind of, interest rates have peaked, and, bad news was seen as good news by market, and people were cheering that we are probably at the rate cycle peak. But since then, overnight, we have seen the hot ISM services index come out in the US. And, even if you look at today, apart from India, which is up 50 bips today, the rest of the region is down, US was down, Europe has started down. So there is a bit of a, caution built in that the rest of the year we could see the narrative shift away from that, inflation has kind of not peaked, and the central bankers could remain hawkish for a lot more longer. And that will contribute to your point, where I do feel that the banking sector, which has not kind of performed, especially the large banks and the private banks, could see some inflows going from here. And we are, Rima just talked about the trend that we've seen in the IT space as well. So I think this could play out quite meaningfully from here till year end.
Shiv, particularly on IT, if you had asked anyone in April when we got those Q4 numbers, the big, the guidance given by Infosys, which shocked the street, that IT stocks would be where they are right now, I think no one would have predicted it, right? This rally has surprised everyone who's been tracking the IT stocks, because despite no improvement in the fundamentals, barring, deal wins, there is nothing which is going for IT stocks that you can put on paper, pen and paper. So what explains that? And is it time to look at how would you view IT over the near term, say the next 6 months, and even over the 3-year period, mid caps and large caps?
So Indian IT is very different, Rima, from global IT, right? We are predominantly, you talked about the deal wins. We have a very large skill set here in the country, which of course, the most of these IT companies rely on. And the fact is that, we are seeing also a trend of, not in the supply sector, we are seeing, friendshoring and onshoring. And we are also seeing, a lot of emphasis on cost efficiency by some of the large MNCs, global players. And as a result of which, the Indian IT sector is continuing to see deal wins. And I don't think that changes in the near term. I think the rest of the world is growth starved. And as a result of which, they are, looking at, cost efficiencies and profitability as well. And that's where, the entire India game changer discussion comes into play. And I think, we talked about the infrastructure expenditure and the capex that's happening. And, it's kind of phenomenal. Indian capex was almost 11% of GDP in, almost a decade back. We have doubled that to 22%. Infrastructure in expenditure this year will see a hike of 33% to almost $122 billion. And, all these spends are happening in India. And the result of it is, global companies are looking at India from a very different angle, both in terms of manufacturing, in terms of services, in terms of IT wins. And I think, even the renewable power space, and, we've been following the G20, you guys have been doing a phenomenal job on that. There is a lot of discussion on the power sector and how India is going to shape up to all the demand that's going to crop up. And I think that's another area which I continue to believe in for the next 3, 4, 5 years. And to your point, whether we see this for the next 3 to 5 years, I think absolutely. I will come back to the point that, there are several positive trends converging for India from different sides of the business, global business ecosystem. There's demand, there's supply, there's system-wide facilitating factors. And I think all these combinations will transcend economic cycles. barring some global macro shocks, I think, even the new policies like the PLI, the digital stack, and the older ones that we implemented pre-COVID like GST are all reaching critical mass, and they can finally reinforce each other to create a very growth flywheel for the country. So I remain bullish. I do feel that, yes, the mid-cap space can see some consolidation, and there'll be some movement back into the large cap space, especially the IT and the banking sector. We also remain very positive in the auto sector as well. I do feel that the one thing that we haven't discussed is my negative view on China. I think, that is a bit of a anomaly there, what's going on. Prices have been deflating for the last 3 years. Real estate is a mess. The debt, the real estate imbalances, deteriorating demographics, and a worsening geopolitical backdrop. I'm going on a ramp here, but you get the picture.
No, point taken. Shiv, everything you say is, I completely agree with everything else. But as an old, a veteran investor in Chennai told me a month ago, I was there. He said, great businesses, but even better prices. That's the problem for a lot of things, not everything. This gentleman I spoke to.
The challenge to that is India is seeing an inflow of both momentum of flow and the earning cycle has completely changed since the last 2-3 years. So while valuations are creeping up, the earning cycle is also holding up very well, which you saw in the latest earning cycle. So yes, prices.
But is that so? I mean, if you look at trailing earnings, right? I mean, earnings expectations, future earnings growth is fine. But I looked at fourth quarter earnings and what's happened to expectations, full year expectations after that. I looked at first quarter. I mean, they're in line. Actually, maybe in some cases slightly on the softer side. It's not as if the full big earnings growth, at least not on a trailing basis. Now, expectations is anyone's guess. But go on.
But I'll caveat that by saying that if you look at the earnings growth relative to what is happening in the rest of the region and developed markets, right?
That is true.
So that investing is a relative game, unfortunately. So, and you're absolutely right. If you saw a stock at 100, it'll be difficult for you to buy at 120, at 50, it'll become harder, at 200, it'll become impossible. And that's what we have been seeing. But I'm telling you, the flow and a lot of cyclical and business factors that are coming into play to transform India in the next couple of years, I remain very bullish, and I continue to feel that the Nifty, the bank Nifty indexes will continue to prop up. Yes, there'll be volatility along the way, right? Markets are inherently volatile, and the global backdrop is not as conducive to markets as it should have been. Cost of capital has gone up, and those narratives will not change. But the reality is that India finds itself in a very sweet spot. You guys have made this comparison well, the J curve, when an economy goes from 3.5 trillion, right? So I think all those things will come into play. And I do, I'm not saying that we remain overtly bullish. And I feel that, yes, the right prices and the right stocks will continue to do well. But fundamentally, I do believe that India will continue to transcend all these global volatile, doomsday, negative global narratives and continue to outperform. Like exactly what you're seeing on the screen today. We are the only market in the region that's up.
We've got a nice, strong, thick Teflon coating, right? And that is working very well. Just one thing, Shiv, since you track global markets, you mentioned that. Have you heard any rumblings around NVIDIA in the US? And because I've been reading something here and there, it becomes important because so much of the US outperformance has been because of NVIDIA. And I'm not talking about the 120, 130 times it trades at. There have been some other some are starting to point fingers at, but anything you've heard?
So I think I will answer that by saying that, it's gone up. It's a very large cap, 1.2 trillion now. And the reality is that to grow at that size and to continue to have the kind of wins that they had with the AI revolution and the chip space that happened in the last 3-4 months will be very difficult to replicate. And I do feel that we have probably seen the top of that, unless, of course, the global central banks start cutting rates aggressively on growth coming off and falling off a cliff, as what we're seeing in China. But I don't see that happening in the near term.
Okay.
I think there are better places to invest at these prices, as you rightly said.
No, absolutely.
Maybe India is one of those places that explains the enthusiasm and the optimism that that Shiv is making. Even 0.0001% of that money starts coming here, and well, who's to say what happens next?
Well, Shiv, thank you very
don't
much.
forget. Just before you let me go on, the reality is that people talk about India being the 5th largest economy in the world, 3.5 trillion. But if you look at the top 10 economies globally, our per capita GDP is still far lower. We are at 2,600. China is at 13,500, which is still 5x, 6x of us. So we have a long runway for the consumption boom in the country and the wealth creation to happen at the middle income diaspora level that we keep talking about. And that is what I think this time is different. As long as we don't do a self goal, and I don't think we will, the trend is only higher.
Well, it's always a good chat with you, Shiv. A great conversation as always. Thank you very much for your time here on CNBC-TV18. I just want to quickly highlight what's happening with Zee. It's interesting because it's spiked up very sharply. And this is starting 250 or so. From what, 200 and... okay, about 277 or so. It's gone up to about 285. Tomorrow is a hearing. There has been... It's done well coming into this Friday when this matter on Mr. Goenka continuing at the company, at least the appeal, etc., will be heard. So watch out for that as well. We'll take a quick commercial break here. We'll come back, and as always, our short-term trading ideas coming up with our technical experts. Stay tuned.
Welcome back. Europe too has picked up. It started flat, but now you've got the French index that's CAC higher by close to about 0.5%. The FTSE and the DAX too are mildly higher, but it's an improvement compared to the flat start. But let's turn our attention away from the Indian markets, away from the global markets for a bit, because global private equity firm Warburg Pincus remains bullish on India. Nisha is standing by with a list of all their key holdings in India. Nisha.
Thanks for that. Bulge bracket private equity firm Warburg Pincus is bullish on India and is aiming to also invest over $1 billion this particular year. About 10% of its global allocation is in India, remember, one of the highest in terms of percentage to global portfolio by a foreign private equity firm. Now, over the years, it has been increasing the pace of its investments and could be investing about $7 to $8 billion this decade. One sector of choice is medical devices in India and globally for Warburg Pincus. Now, in line with the wave of block deal exits by PE firms this year, well, Warburg Pincus recently pared down its stake in IDFC First Bank. It's one of its, remember, over a decade-old investment, and it continues to hold a minority stake and remains bullish. As is the case with its oldest investment, Bharti Airtel, in which Warburg has halved its stake and continues to hold the rest to see the further upside in that company. MedPlus, Kalyan Jewellers, PVR are some of its other return propositions. Now, in terms of the investments, it has recently really bought control in two unlisted companies, Vistar Finance, that is an NBFC lending to the MSME space, and WaterTech is a differentiated consumption theme in the bath fitting segment. In fact, look at its portfolio in India. There are a bunch of diverse consumption-led companies that Warburg has placed its bets on. Bharti Airtel is digital/tech-based consumption story, while Kalyan in jewelry, Biba in apparel, and there is even packaging, realty, tires, and even bath fittings. So really capturing growth from different kinds of products and pockets of the consumers. Now, it has built a fairly large portfolio in new age companies. Cartrade made its way to the IPO, but some of the others from this space are in the waiting for better market acceptability as well as valuation matrices for the startup world. But IPO exits and partial exits have been part of Warburg's India strategy. Now, when we talk about healthcare is another favorite for PE investors in India, and Warburg remains bullish on this space, especially the medical devices, in which it's present via micro-life investment. Now, a large part of Warburg's portfolio is invested in financial services space, and there are, again, like consumption, very differentiated ideas that the private equity has invested in. Besides IDFC First Bank, there is housing finance, microfinance, insurance, tech-based service provider like CAMS, and even new addition, Vistar Finance in the MSME lending space. So all in all, Warburg Pincus remains bullish on its Indian investments.
All right, Nisha, thank you very much. That's a pretty comprehensive sort of look at one of the big investors in India, both in the listed and the unlisted space. Well, earlier we spoke with Vishal Mahadevia, a managing director and head of Warburg Pincus India. Listen in to what he had to say.
Firstly, markets are strong. Liquidity in the markets, both from domestic and foreign investors, remains really strong. And these new investors are looking for A-plus assets with really strong corporate governance. So funds like us that have helped create these assets, these institutions that are now strong listed entities, will naturally find windows like this for block trades that usher in the new investors. And I think, look, as a fund with a life, while we have no immediate plans to do anything, it will be natural for companies that we're in, companies that other private equity funds are in, to use these windows, and you'll see more and more block trades, is my opinion.
All right, that's a word from Warburg Pincus and how they're looking at their investments in India. Back to the market, which is continuing to hold on to that momentum, 19,722 on the Nifty. Mitesh is back with us. Mitesh, what an afternoon it's turned out to be, right? We started with the morning, subdued cues, little negativity. Look at the turnaround now. What's your advice for the final minutes?
See, earlier, I think at the start of the show, I was advising buying into Bank Nifty. That itself has moved up by about nearly 160, 170 points. And I think that still shows momentum. So on the trading side, I have a call on IndusInd Bank disclaimer. I have futures positions over here, and it's also a recommendation to the client. So there's vested interest very clearly. But for the time being, I would recommend buying this with the stop at 14.19 for targets of 14.75. And a BTST on TCS with the stop at about 34.45 for targets of 34.80.
Okay, thank you very much for that, Mitesh. Enjoy the rest of your day. Sudeep Bandyopadhyay, the group chairman at IndiTrade Capital, is with us on the show. Sudeep, wanted to get your thoughts in on Nazara Tech. Now, earlier this week, the company raised about 100 crores from the Kamath brothers, Nikhil Kamath. Today, the company has announced that they've raised an additional, an incremental 410 crore rupees by issuing shares on a preferential basis to SBI Mutual Fund, 3 of their funds. So totally, they raised close to about 510 crore rupees. How do you view Nazara Tech? They've done this issuance of share at a price 714, which is lower than where the stock currently is.
Well, I think it's a fantastic company, and overall, the sector is such that it is globally booming. We have probably started to see the beginning of a major boom in this particular space. If we look at the global gaming space, and there are two components to it. One is the software part, the other is the hardware part. I think both software and hardware is booming globally, and Nazara is definitely well positioned to benefit out of the India cost structure and India-based operation. So not only India, but I think they can hope to become a formidable player in the global space. And to do that, obviously, they need to raise a lot of capital. They need to have their, the strength in proper place before they start hoping to do that. So I think this is the absolute right thing they're doing. This is a great opportunity for Nazara to scale up and really become a player worth recognizing in the global gaming arena. And with the kind of marquee investors they are getting in, I'm sure they're planning to do that. So yes, they did raise the capital at a price which is slightly lower than the current market price, but I think that's par for the course.
Okay, got that. Sudeep, hi, good afternoon. What is happening with these shipyards? I mean, look at them. It's not like this move has just started. It's been on for a couple of months, and yet you still get 20% circuit days on names like Cochin. Garden Reach is up some 11%. Mazgaon is up 10-11%. Just difficult to wrap your head around it. What's your advice on these stocks now?
Well, Surbi, I was a big pull in the shipyard companies. I think Mazgaon Dock around 200, 250 levels. I was telling people to buy. Kept on telling them to buy till about 1,000 levels. But what's happening now, I think, defies logic. And I'll be extremely careful at this stage on these 3-4 stocks which have really run up. Honestly, I have no answer to the question you raised that what we should do at 2,000 plus level on a Mazgaon dock, or the kind of valuation at which Cochin Shipyard today has reached or Garden Reach is quoting. I think the order book or the profitability projection doesn't warrant this kind of valuation. Also, we have to remember that the order win for these companies and the execution of that, there's a huge time lag. And the benefit of the order which they're winning today will come over a long period of time. So it's not that they're winning an order, so immediately profits will start flowing in. It's not a construction company. It's not an EPC contractor. So we have to be careful while we are studying these stocks. So I'll be extremely cautious and would request investors to also be extremely cautious when they are buying into these stocks.
Prashant, when the year started, the financial year, that is April, which is not too far away, Mazgaon was trading at some 650 rupees. Today it's 2,100. So maybe 1,000 you felt it's enough, at 1,200, at 1,500. It's the kind of stock that I think makes investors feel silly and foolish on a daily basis, just with this absolutely insane momentum that we've seen. Mazgaon and its peers, of course, all of them are up and about today.
The biggest shareholder in Mazgaon also would not have thought that the government of India.
They'll be very pleased and happy with themselves, I'm sure.
Shocked and surprised at the same time, I'm sure.
Absolutely, what a move. Let's take it to 450% in the last 12 months, and the bulk of that gain has just happened. The rally started in April. That's the point that we're making. Let's take a break on that note. We'll come back with more market talk in just a bit.
Welcome back. Looks like it's going to be a close above 19,700 on the Nifty, with the sensex comfortably above that 66,000. This has turned out to be a solid session. The benchmark indices higher for the 5th consecutive day, and this is despite weakness in the global markets. At least Asia closed firmly lower, though Europe is showing some strength right now. Sudeep, power, that's a pocket of strength today. You've got Coal India leading with a gain of about 7%. Power Grid, NTPC, these utility companies are also higher in trade. Do you like any of them? Which one and why?
Well, I like both Coal India as well as NTPC. I think Coal India, there are two things happening. One is definitely their performance in terms of efficiency have improved significantly. That gets demonstrated in the output which Coal India is generating month on month, and that's growing. The second is the entire scenario on thermal power, consequent upon power demand increasing, has drastically changed, and coal demand is continuously increasing. Now, this augurs well, and that is getting demonstrated in the fact that the Coal India's realization both at e-auction and the contracts, bilateral contracts, is improving. So I think Coal India, steady, stable return, they can continue even from current level, and an investor can definitely look at. The other company is NTPC. I think it's a great company, the largest power utility in India. And we all know about its traditional business, the great linkages, coal backward, forward linkages, but it also now has a very large green energy business. That's probably still not getting factored in. And at some point of time, value unlocking will happen. And even at current level, where probably the traditional business is fully priced in, the new energy business is not priced in. That's what we believe. And investors with little bit of risk appetite can definitely buy NTPC as well.
Sudeep, we leave the conversation here for now. Thank you very much for joining in. Closing at the high point of the day for all the key indices, up 0.5% on the Sensex and Nifty. The mid-caps are powering with a gain of 0.75 of a percentage point. The Nifty Bank is higher by nearly 1%. I think that's the big, change that banks have performed today. So whether it's, IndusInd Bank, which is topping the chart in the banking pack, State Bank of India is higher by 1.7%, Axis Bank, HDFC Bank, Kotak Mahindra Bank, all the banks today have done well. There was no exception to that rule. Apart from that, Power, Coal India, these are stocks which did well. The possibility of a large deal on L&T pushed the stock to levels above 2,850. So that was a big mover. IT contributed. Tech Mahindra, LTI Mindtree up nearly 0.5%. On the losing side, Torrent Pharma, some profit booking. Tata Consumer weak. Britannia under pressure. Tata Consumer, of course, some profit booking after yesterday's sudden rally in the last 1 hour, denying talks about buying Haldiram's. M&M a bit subdued in trade too.
Well, of course, on the mid-cap screens, lots and lots of action there as well. IRFC, REC, PFC, a lot of these financiers, government-owned financiers, all of them have had a great session today. There's United Breweries. We were just discussing that story with Mangalam telling us more about the new person who's come in charge, 5% up. Shipbuilders we have discussed. Big gains on Mazgaon, 9%. Cochin Shipyard, 20% circuit, and even Garden Reach having a good day. Look at the new kid from the TVS stable, TVS supply chain. Good day for this one, 9% up on that stock as well. Devyani, Blue Star, it's such a long list of stocks and reasonable size mid caps. These are not even sort of very small micro caps or small caps. Reasonable size stocks that have done exceedingly well today. On the news side, in terms of where the action was, of course, Dixon, Keynes, etc., they were active because of that CLSA note. Keynes is finally going home with a gain of about 2.5%. Dixon also up and about. Jubilant Foods lost some ground on some cautious brokerage commentary that came in today. And, well, in Swift Lab, what do you say? 20% up yesterday, 20% down today.
Curious case, right?
Yeah, I mean, big volume-led cut, actually. Some more losers. I mean, these fertilizer companies, right? FACT, GSFC, they all came off a little bit. I think APL Apollo Rima mentioned earlier. Rate gain is now back below 600 once again. HPL Electric, right? I mean, Genus Power and HPL have been sort of twins rising together. So that came off a little bit as well. Actually, in the large caps, I mean, L&T started flat, right? I mean, the order came through earlier on, but it was not as if it started with a big gain or anything. It started flat, and as the market picked up, I mean, it basically kept moving higher. So that's a big mover into which you could have bought into right at open. I mean, it started at 27.30 and ends 50 rupees higher from that point on. Closes 28.46 on Larsen & Toubro. So that's what you have. Actually, more, sorry. That's a big one coming through, 115 rupee gain. 19,723 is what you have in the index, 112 points higher. Pretty good look once again. We'll wrap up on this edition of Closing Bell from all of us here. It's goodbye. Thank you for watching. But don't go anywhere. Our Thursday special, Big Deal, is coming right up.